Number one, Paul here. Today I'm going to be going over a continuation to what I talked about a while ago. It was I had the about, how many EMAs? There were about 10, yeah, it was about 10 EMAs on here. Uh, I'm going to kind of update you guys on that, and I'm using an example today for the stock market, but if you guys get the idea, you can pretty much use this for crypto too. But I'll talk about this with crypto probably tomorrow. Uh, so I want to go over the strategy. There's a little update that I do in this formula. I mean, there's nothing wrong with the old formula. The old formula that I talked about in the last couple of videos, you basically just need EMAs. You need 1, 2, 3, 4, 5, 6, 7, 8. You need 10. You need 10 EMAs, so you need to have the pro membership of TradingView in order to make it work. But what I found in this update is I took away the 1348, and instead of having the 1348 with the EMAs, I put them down here with the indicator. It says EMA difference. So for EMA difference, I just went to settings and changed my inputs to 1348. So visually, with this method, we are seeing on screen. You're seeing both strategies. You're seeing the 1348 with down here with the EMA difference, and then you're seeing the rainbow strategy with all the other indicators up here. And I think this one is kind of more powerful because you can see it. You can see it more visually with this strategy. So I'm gonna kind of explain what you have to do. It's pretty simple. Right now we're doing SPY. So what you want to look for first is you want to follow the 20 EMA. So what I have, the 20 EMA on the screen right now is the bright yellow line that you see here. So right there, the 20 EMA is the one there on the top. That's the one you got to keep your eye on. So the moment that you put in your entry, you need to wait for the collision when you're looking at it with the rainbow. I'm going to call it the rainbow strategy. You want to follow the 20 EMA, and you want to wait until that 20 EMA has at least crossed, had a collision. It's had a collision, and it's all the way. It's collided all the way up to the 55. So the 20 EMA has got to collide with the 55 EMA all the way up. That's how you know to make your move. So whether you're doing this up, if you're doing the stock market, if its trend is going up, if the 20 EMA is going up like it is right here, and it has collided with the 55 EMA right here, that's your signal. So the next thing you want to look for after you see your signal is you want to look at your EMA difference. And you're looking for you're basically looking for the cross. It's the same thing that if you were to have the 1348 actually listed as a indicator at the top, but it's just more visually on the bottom. Usually when you see like the start of a little small green a green or a red, basically at this point right here where you see the 20 EMA crossing to the 55 right here, and if you see your EMA difference, which is pretty much plugged into the 1348, if you see the signal of it turning green or of it turning red, that's your signal that it's going to go in that direction. You have two confirmations, if I'm explaining myself right. You have your 1348 visually confirming it, and you have your 20 EMA confirming it. So when you have both of these confirming the direction, it usually means you'll be able to tell where it's going to go. So from this point on, let me just do a measure example here. So right about here, you see the 20 EMA crossing all the way over to the 55. You have to wait for that. And then you also see your EMA difference with the 1348. That is confirming that it's going to be going up. So what you can do from this point on is, since you know that it's probably going to be in an uptrend for a little while, you could get in right about here. Get in right about here with your call, and then you just write it out. Now I don't have the screen to go, well, let me just move this here. Let's just move this a little bit. Now I have the screen. So let's do this again. Okay, so right about here, you're going to come in with so you'll come in with your call right around this, whatever price you can get at, but I would get at around 372. So what I would do after this is, how do you know when to get out? Well, I don't have the screen for it, but you just look at the 20 EMA and you see where it's going. And if you see the 20 EMA start to kind of dip a little bit, if you see the 20 EMA start to collide with the 25 EMA, you know you need to start getting out. If you see it getting closer, you know you need to start getting out. So right here, this alone was it was 2 days, and that's about a $5 difference in price with SPY. So that was about $250. So let's do this again. Let's just look at I'll do a couple of other examples. Here we got one right here. Okay. So the first thing we see the 20 EMA crossing all the way. So see, the 20 EMA is crossing. It has clearly crossed through the 55 as well. And what we can see down there in the bottom with the EMA difference is we see the first signal. We see a little red right there, which is the signal of the 1348 cross. So you got two confirmations right there. So let's just see what happens from that point. So from this point, I would get in right around here. I would do a 374 put around 374 and basically write it out, because you look at the 20 EMA, which is the bright yellow line. So the bright yellow line, we wait it out and we see what happens. So I would get out right around here. That was 2 hours. Difference of price about $430, so that was about a little over $250 right there. You could tell because look at the 20 EMA and look at what it starts doing. Look what the 20 EMA starts doing, so you can see it happen before it happens. So let's do this one more time, and I think you guys get the general idea. You want to look for. The first thing you want to look for is the 20 EMA crossing through all the way to the 55. So so you see right here, you see the 20 EMA crossing all the way through the 55. If you're not sure, just zoom in on it and double confirm it. You can see it right here. 20 has crossed through the 55. Sometimes you may have to zoom in to, confirm it more. But we also see it, the EMA difference right here. This is the 1348, and that also signals a downtrend. So what we're going to do is we're just going to get in around there. So right around here, we would get in. And if you want, you could just position your you could position your, you could draw a horizontal line right here to make it easier for yourself. So let's do that. Let's just draw a horizontal line because it'll be my last one anyway. So draw a horizontal line right here to get a good idea. Just draw a horizontal line. So, oh crap, where'd it go? I lost it. What, did I lose it? Where'd it go? Oh well. Looks like I lost it. Well, anyway, looks like you guys get, well, you guys get the general idea anyway. So make sure you have all these. This will only work with the pro membership of TradingView. You have to have, for this strategy, you have to have 20, your moving average exponential of 20, 25, 30, 35, 40, 45, 50, and 55. Make sure your 20, it's a bright color because you're going to be following your 20. You're going to be following your 20 and you're going to be waiting for that 20 to cross through the 55. That will be your first confirmation. And your next confirmation will be your EMA difference. And you're going to use that. You're going to make that a 1348. And you're going to wait for you to see either the first one to be a little red or a green. In this case, red, and that signals downtrend. So I hope I made this clear. I'm going to talk about this more. Tomorrow I'm going to go over this strategy with doing it with crypto. But anyway, if you guys like this video, make sure you hit the like button, hit the subscribe button. I'll see you guys in future videos.